So hi guys, it's SJ speaking, and in today's video, we're going to see about trend lines and channels. So trend lines and channels. This video is also one of the technical analysis videos. So coming to trend lines, what is a trend line? It is a line drawn on a chart by connecting certain price points together to show the direction of trend and how stock prices could move further. It is used to find trading ranges by showing support and resistance levels and also potential breakout if the stock price breaks out of a certain range. So trend lines are used in two ways. It can also be used to trade within ranges, but mostly it is used for breakout trading. So you can use trend lines in two ways. So this is how a bullish trend line would look. You see, you can see, um, you can see this is where the resistance is. There must be minimum at least three uh, highs and highs or lows of the candles. Three highs of the candle must be touched. In this case, there must be at least three to confirm a trend line. And usually some people when the people are trading within ranges, they usually take an enter here and keep the stop loss here, and they keep the targets here. And if again comes here, they will sell here, keep their stop loss here and the target here. This is trading within ranges. But in case of breakouts, there are three resistance here, and the fourth, the it gives a breakout. So usually people, aggressive traders, enter here. For a valid breakout to occur, three rules are used. First rule is candle's body must close. Second rule, there should be a high large real body, which is known as a high momentum candle. And third thing, you can look at the volume, whether the volume is also increasing, volume is also breaking out. You can look for volume breakout. Once these three things are seen, you can look for a valid breakout. Not all the three things are needed, but if all the three things occurs, there is a high reliability. So valid breakout occurs, and the aggressive traders enter here, and they keep their stop loss around here or here, and they keep the targets. First target at the first resistance point, second target at the second resistance point, and third target at the third resistance point. So this is how targets are kept. The targets can also be kept by using Fibonacci retracements, but usually it is based target is kept upon support and resistance. So conservative traders usually wait for a retracement. Retracement, once the breakout occurs, the stock price will not go directly here. The stock price will come down and then go here. There is a small correction. So the correction usually touches the trend line, but not always the case. Sometimes the corrections might occur like this and go up. It is not usually it is not needed always. It's not needed to touch the trend line. Sometimes it might touch the trend line. Sometimes it might not touch the trend line. So in this case, it has touched the trend line. So I have brought you an example that shows like this. So people usually look for combine other strategies such as candlesticks patterns. So you can combine other strategies. If you are using trend lines, you need not only look at the trend lines. You can use other strategies such as support and resistance structures, market structures, or candlesticks, and you can combine them and take your trades. In this case, people look for candlesticks patterns, and if any bullish candlestick pattern occurs here, then usually they take entry here and they keep their stop loss here and the targets according to the support and resistance or some other tools such as Fibonacci. They keep their targets. So this is the structure. You can see the example here. You see the body of the candle is broken out, and it's also a high momentum candle. And the again a retracement is taken place. So aggressive traders enter here, whereas conservative traders usually enter here and keep the stop loss here, or they might wait for a confirmation of candlesticks pattern. You see, this is a bullish ceramic candlestick pattern. They enter here, or sometimes people might take the first breakout candle, this candle, and once the candle breaks out this open price after retracement, they might enter here. So some might even wait for the high to get broken out and they might enter here. So it depends upon the behavior of the investor or trader. So usually it's better to enter at looking at the candlesticks pattern and confirm and enter here, or entering here and keep their stop loss. This is less riskier. So it depends upon the people. So this is the pattern of the bullish trend. In case of bearish trend, this is here. You can also trade based upon the trading ranges too. So not always for breakout. You can also buy here, and you can keep your stop loss here and sell here. Or if it can again come down and buy here, keep enter here, keep your stop loss here and target here. This is the case of range bound trades, or breakout trading means like this. So this is the example of a bearish trend line breakouts. So this is a fake out. So this is not a valid breakout. This is the valid breakout here. So aggressive traders enter here. Retracement traders wait for a candlestick's confirmation and they enter at the after this candle's low is broken. They enter here and keep their stop loss here and targets according to the support levels. So in the bearish trend, the target is based upon support. So next coming to the channel. So what is the difference between trend line and channel? Not that much difference. A trend line is drawn here. If you draw true trend lines, it is a channel. So a channel is a type of chart pattern. So usually in technical analysis, there are two types. One is price action and one is indicators. So these trend lines and channels, they come under price action trading. So a channel is the type of chart pattern which is formed by connecting certain price points which usually acts as a support and resistance level. It is used for trading within ranges as well as for breakouts. So this candle is also channel is also used for two types. One is trading within ranges and another is for breakout. So three types of channel. One is normal channel and one is falling channel and one is rising channel. So you can see this is how the structure of these three channels look. In the case of falling and rising channel, you can use support and resistance for targets. But in the case of normal channel, you can't use support and resistance for targets. You can only use the target based upon the pattern. You can see this range. You can take the distance between this trading range and you can keep that. You can copy paste that and you can keep your first target, or you can again keep it as target 2 and again keep it as target 3 and so on till you find it bullish enough in the case of bullish market, or bearish in the case of bear market. So this is the structure. This is the example. You see, I have taken once three touches are needed for a valid channel to, like the trend lines, three touches between the ranges, support and resistance. There should be three supports or three resistance for the valid channel to form. And once you can also keep the support and resistance, and you can also, if the channel, if it goes like this, you can also keep your sell order here and stop loss here and target here, or you can buy here, keep your stop loss here and targets here. But once it breaks out, you can take targets based like this. So you can see this is the range. You can copy paste the range and you can keep this is your first target, second target, third target. So you can keep trailing stop losses as long when you are in profit zones. You can keep trailing stop losses. Trailing stop losses is nothing but moving your stop loss to your profit zones. So once your so you usually initially your order is placed here and your stop loss is placed here. So after your order your buying, after the stock price reaches target 1, you can move your targets to your buying zone. You can move your stop loss to your buying zone. And once your stock price reaches target 2, you can move your stop loss to target 1. Once it reaches target 3, you can move your stop loss to target 2 if you are holding your stock. So this is known as trailing stop loss. So the next is falling channel. Falling channel is similar to bullish trend line breakout is similar to that. Only the difference is in trend line it's usually a single line, whereas in a channel it's a double line, also connecting the supports. So this is known as falling channel and this is known as rising channel. Usually falling channel breaks out upside only, but it can also break out on the downside, but usually it breaks out upside. So in the case of rising channel, it usually breaks out on the downside, but it can also break out on the upside, but usually it breaks out on the downside. So this is the examples. So now I will show you live charts. So I will show you live charts. So how to draw a trend line? You can use trading platforms. Various trading platforms are available, such as TradingView. This is one of the trading platforms which I personally use, and I also suggest you to use this. This is one of the best available. You can open a trading account, TradingView account, which is free. So you can take this trend line tool here, or you can press Alt plus T button, and you can connect the highs of the candles. You can connect the highs. So in this case, this is the high. This is another high. This is next high. This is high. So here the candles get break. So the first green candle gets break. Bullish candle breaks out the trend line. the volume is less, but since the volume is only an additional confirmation, so you can, since the body gets close, aggressive traders usually enter here. Conservative traders wait for a retracement. The retracement need not always touch the trend line. So it need not always touch the trend line. In this case, it does not touch the trend line. What happens here, it touches one of the support levels. You see, it touches one of the support, the resistance which has converted into support. So this is the weekly chart, but in a day chart, you can clearly see the resistance point. You can always change between timelines to look at the why the candlestick. So here is the retracement. It bounced back. So why it has bounced back? Why the stock price bounced back here? Because there is a resistance here. So it is usually drawn, when drawing it as a zone, it is known as a supply zone. If you haven't watched my support and resistance video, you can watch that video and you can come and watch this video. It will give you a better clarification. It will give you a better thing. So you can see the resistance has been converted into a support and the stock price comes here and then again goes out. You can take your entry order here and keep your stop loss around this support level, or you can even keep below this zone, and you can keep your targets according to the resistance. You see, you can place your first, you can press this trend line Alt plus T, or you can also keep horizontal line Alt plus H, and you can press the shift key for in case if you have used Alt plus T, and you can keep the first target, second targets, third targets, and the fourth target. So this is your first target, second target, third target, fourth target. This is keeping your targets based upon resistance, but you can also keep your targets based upon Fibonacci retracements. I will bring a separate video for the Fibonacci retracement. So you can keep several ways. So this is how trading is done. But some guys they might not use these methods. They might use the support and they might use support and resistance. They will usually draw it as a demand and supply zone. In this case, it's a demand zone, and they usually enter only, they take the previous support zones and they consider it as a demand zone. And once the stock price breaks out of this demand zone, they take entry here. They usually take entry here. So, and they might keep their targets, or some even look for additional. If someone have missed the entry points, they might even look for entering like by drawing zones here, by connecting the zones, all the zones, previous support zones, and they will draw it as a demand zone. And usually they will take enter here once the stock price breaks this demand zone. You see, they will take enter here. They will only take an entry order here once the trend line breaks beyond this point. They will not enter here. But aggressive traders usually enter at this point. Some might enter only here and keep the targets here. So some might even, if they miss the trade, they might look for a retracement. Retracement traders usually look for a retracement, and they might they might look at this point for entering their trades. They will usually go to 4-hour charts and look for any patterns. In this case, it has formed a bullish harami candle, which I'll show you in the candlesticks part 2 video. If you haven't watched my candlesticks part 1 video, watch that. It is a good video. So they will usually take an entry here. Looking after confirming the candlesticks pattern, they will enter and keep the stop loss here and the targets here. So this is entering the using the trendline strategy along with this demand and supply zone. That is drawing the support and resistance as a zone. It is known as demand and supply zone. They will combine these strategies, and they also use the candlesticks pattern as a confirmation, and they enter. Usually the stock price taps at the demand zone and again goes up, and again step downs and again goes up. You can clearly see here. So in the case of selling, it's the same. It's the opposite. It takes place like this. So in the case of selling, so this is what happens here. So using the demand and supply zones for entering into a trend line is gives you accurate entry points. Sometimes trend lines might be fake out. Many fake outs might take place. It might not break out. It might go up and come down sometimes. So for a valid breakout, some traders usually look at the demand and supply zones and take entries based upon demand and supply zones. So next, coming on to some also use trading trend lines. Some also draw trend lines like this. You see, they might draw like this. They might use two lines, and only when the trend line breaks the second line, they might take an entry zone. Sometimes they look for retracement also. So once the trend line breaks, it usually touches the this zone and again goes up. Some might use trend line by drawing true lines. So some traders might also draw trend lines like this. So this is another way of drawing trend lines. And then coming into the channels. So this is an example of rising channel. So channel is, you take this tool here and you can see parallel channel. So you can draw like this. So you can draw by connecting this highs, and usually three touches are seen here. First touch, second touch, and third touch. Trend line is confirmed. When you are trading within ranges, you can use it as a support, and you can enter here and keep your targets here. But when you are only trading for breakouts, so this is a valid breakout. The candlestick's body has closed. So this is a valid breakout. So aggressive traders enter here. Some traders who are conservative look for the retracement, but retracement always doesn't touch the channels. So in this case, it hasn't touched the channel. So it has only touched the one of the support zones. Where you can draw it as a supply zone here. So I give the color it as red since it is a selling zone. So this is by connecting the wicks, you can see it is a supply zone. They usually wait for a retracement up to they wait for a retracement of here, and they might take the entry point here. Some might look at the candlesticks patterns. If it is a bearish candle, some bearish candlestick pattern is formed, they might take an entry and keep their targets up to the previous support zones like this. But usually targets are kept based upon the resistance. In this case, the first target is by placing targets based upon resistance. So this is the first target, and this is the second target, and this is the third target. This is the third target. By placing targets based upon support, in this case it's support, target based upon support. So targets can be placed in several ways. Some might use Fibonacci retracements and they might keep targets. So they might enter at this 0.382 levels and they keep their stop loss at below the 0.5, and the target is usually minimum target is 0 and the next target is 0.272. I will bring a separate video for this Fibonacci. So this is the you see, this is rising channel. So whereas in a case of falling channel, it's this. Usually the falling channel is like this. Falling channel is usually like this. I can even change the color of the candle for you. So this is how the bullish pattern looks like. So this is the falling channel. So some aggressive traders enter here. Conservative traders look for a retracement and they might use the demand zone for a pullback. And after this, it goes again by using some candlesticks pattern. In this case, there is a bullish engulfing pattern, which is a bullish candlestick pattern. And after this, they take their entry here. They take their entry here and keep the stop loss here and keep the targets here. But usually targets are kept based upon resistance, like this, and second target like this, and third target this, and fourth target this. So it depends upon the various traders. So next thing is normal channel. Normal channel, you can't place targets based upon support and resistance, you can use this tool here, price range. Here you can select this tool here, price range, and you can keep the distance between this trading range, and you can use control plus drag. You can press your control key and drag, and you can keep your first target here, and you can also drag this again, and you can keep your second target here, and again here you can keep the third target here, and you can move your stop loss. You can move your stop loss as long your target is reached. You can move your stop loss. This is known as trailing stop loss. You can also watch my other video, types of orders, and you can place. So this is in the case of both bullish and bearish market. So what this is how trend lines and channels are drawn. So you might have got a good idea about what are trend lines. And another example is, you can see Tata Power. You can see this is a channel, falling channel. You can see. Wait a minute. You can see falling channel here. The volume is so huge here. You can see in this case there is not that much retracement. Okay, the retracement usually occurs at most times, but if the demand is so high, retracement usually doesn't occur. In this case, the retracement, there is not that much retracement. The candlesticks shoot up so much, so large, since there is excessive demand for the stock. So you can see the volume is so high, that's why there is no retracement. So this is how trend lines and channels work. So hope you guys enjoyed this video. So give a like, share, and subscribe to my channel if you like this video. It takes a lot of effort for these videos to be made by me. So hope you guys enjoyed this video. So like, share, and subscribe to my channel, and press the bell icon and also the all button for getting notified for all my videos. And apart from that, if you want to learn trading personally from me, you can call me by calling at the number which is in the scrolling below. So I will give you all the details about my trading course. And apart from that, if you want to open a Demat account, I have given Zerodha link in the video description below. You can open a trading account from today onwards online. Only PAN card and Aadhaar card is needed. You can open your trading account from today on itself. So hope you guys enjoyed this video. I will bring a separate video about Fibonacci and some other tools on my next technical analysis video. I'll also bring videos about fundamental analysis and also finance based topics. So if you like the video, please like it, give a like, give a thumbs up, and share with your friends and family. So share, that is important for me. So the persons who are interested in these videos can watch my videos, and this will give you and once I get more subscribers and more likes, it will motivate me to create more videos, and this will help you guys so in your trading career. So if you are taking it as a full time, or if you are trading as a part time job, do it as a part time job. So kindly share it with your friends and families. So until then, I will visit you in my next video. So bye bye, take care.